longer term basis. And by longer term, I mean 3 to 5 years. We have set a target initially for growth gems to get close to $1 billion of market cap and then grow 5x in the next 5 to 7 years. So that's what we're looking for from the growth gems, and we're seeing a number of positive movements there, and we'll see more of that over the next quarters to come. So I would finally say consistent delivery on our commitments. We've talked about delivering 18% ROE. Year to date, we are at 19% right now. We've talked about 15 to 20% EPS growth. If you look at the last 2 years, our CAGR is 40%. I'm ignoring F21 because that was a low number. The CAGR obviously would be a lot higher if you take that into account. But if you just look at the last 2 years, it's a solid 40% CAGR. And therefore, business is on a sound track. I would invite Rajesh to take you through details on performance in the auto and farm sectors, and Manoj will then close it with a brief overview on the financials in addition to what I just covered. Rajesh, over to you.
Hi, good afternoon all of you. Good to be here with you again, those who are here and those who are here, joined us virtually as well. So quick look at the automotive business. As you can see, we had a 20% overall growth in volume. The SUV volume growth was higher at close to 30%. That was 211,000 volume for the quarter. The revenue market share was up, and we got back to the #1 in revenue market share position, both for the quarter and YTD for the year. And as Anish mentioned, the LCV less than 3.5 ton market share continues to be very strong and robust at 49.6. We also got the Auto Car Manufacturer of the Year this year for a reflection, I guess, of things that have gone well for us in the auto business over the last year or two. So thank you for that. The graph here shows you the volume build-up on the left, and that's a SUV volume build-up. As you can see, it's gone up from 57,000 in Q3 of F22 to about the 119,000 that you saw now. And we've been consistently, even on volumes, in spite of the high price points we operate at, #2 on volume market share as well. And on the right, you see the revenue market share, where we've been, as I said, #1 on revenue market share over the last 3 cumulative quarters of this financial year. This is the look at our booking pipeline. The open bookings now are at 226,000. We continue to get strong new bookings at 50,000 per month. The billing rate has gone up clearly, so that helps bring down the waiting period and also the open books, which is something we were all hoping to get going with our brands, and you can see the reflection of the improved capacity delivery out there. Typically in December, we do see a higher cancellation rate. We saw that happen this year as well, and hence you can see the cancellation number as a quarter average is higher than what we've been showing so far. In January, it's back to where we were earlier, which is the less than 8% number. But this has a reflection of the win number changeover that happens in December, where we see cancellations. So like I said, our bookings continue to be at about 50,000 per month. Because the delivery rate has gone up, it's brought down the average bookings. And we do want to, over a period of time, be in a situation where customers have to wait less for our products. We always said that consistently. From where we are now, growth is going to come out of customers being able to access our products easily. We are not at a stage where customers are going to want to wait 18 months. So future growth is going to come out of being able to deliver in very reasonable periods of time. I spoke about the win change and the cancellations already. This is the status on where we are on capacity. We had said we'll exit this quarter at 49,000 capacity. We are on track to achieve that. We expect the next few months to be flattish from a current volume standpoint. The main reason for that is what you read out there, which is the XUV 300 is going through a ramp down as we prepare for a mid-cycle enhancement, and we would hence see a coming down of volume on that product over the next few months till we are ready for the changeover. Also, there are some variant capacity mismatches. So overall, we at this point of time would expect a flattish level of volume for the next few months. For next year, SIAM has put out industry projections, which for passenger vehicles is 3 to 4%, for UVs is 10 to 12%. We expect our UVs to grow faster than the industry and would be expecting our growth to be in the mid to high teens. The LCV volumes we spoke about, the volumes are at about 63,000 a quarter, and the market share is at a very healthy 49 odd percent. Just a quick look at last mile mobility portfolio. It's a very healthy product portfolio, very strong product portfolio. More investments are being made in strengthening our product portfolio with new platforms and other new variants which are on the anvil, just around the corner. So it's a very strong portfolio cutting across segments. In the last quarter, we did a total volume about 27,000. You see the mix of EVs to non-EVs in that. We believe, like I said, we have a strong portfolio and new products. There is clearly increasing competition. We believe that is very good. When you want to grow a category, competition does help increase the pace of industry growth, and we believe that we will see that happening. When you look at the L5 electric category as is the primary source in which competitive intensity will come in, that is penetrated right now only at 11.6%. So there is enough upside for us to drive growth in that category, and that's really what we want to do. We want to drive a very strong electrification of the three-wheeler business. We believe that is one category which is going to really electrify much faster than most other categories, and like I said, more competition will enable that growth to happen. We've seen a healthy growth in the L5 electric volumes in Q3. That was 118% year-on-year growth. Even in January, the pace of growth has continued to be strong at 69%. The market share of the L5 segment in Q3 was 48.5. In January, that is back up to 61.9. We are expanding our distribution network, and we remain very, very, very optimistic on this category by way of our ability to grow the business, because the level of electrification, as I just showed, is just 11 odd percent. And this category will electrify the fastest, we believe, amongst all the automotive categories. This is a look at our financials. The revenue growth was 26% for auto, and the PBIT growth without the one-time adjustment of the impairment that Anish spoke about a little earlier, and I think Manoj will cover in more detail, is a 91% growth. So 802 was the uncorrected last year PBIT. This year it's 1530. Sorry, I think I missed a slide. Yeah. So this is our auto margin slide. In Q3 of F22, we had said we'll improve our margins in the midterm by about 3%. That happened, as you can see, in a short term, which is in 1 year, from Q3 to Q3 of F23, we added 3.3% margin and went to 6.6. In the next 1 year, which is the Q3 of last year to Q3 of this year, that's up to 1.7%, and the auto margin now is at 8.3%. With that, I'll move on to FES. The FES, as we know, has had negative growth for the industry, which was 4.9% in the quarter. Lesser for us because we gained market share. We gained, as you've already heard, 80 basis points improvement in market share. The rural economy, one key indicator of the rural economy is something we track closely internally. This is an internally developed index. We call it the government spending index. Clearly, there's a high correlation between when the government spending in rural goes up. This is a combination of multiple things that go in. It's the rural spend, agri spend, housing development. All of it is the whole sum of money that goes into the rural economy. That index at this point of time has gone down, but you can see it inching up slowly. And we believe that is an indicator of how quickly the rural markets will come back. Clearly, the rainfall distribution or dispersion, the timing of that has not been great through the last year. That's affected a lot of the markets, in particular the West and the South. The positive news is the terms of trade for pharma, which is the difference between output inflation and input inflation, is turning positive, and that again enables farmers to have more money in their pocket. So that we are seeing as a positive trend. Of course, the first two monsoon forecasts are out, and both of which indicate a normal rainfall in the coming year, but let's wait and watch. You've seen our market share trend. The market share is 41.8% right now, and we gained that 0.8% we spoke about. Farm machinery continues to grow strongly. It's a focus area for us, and this is in spite of the stress that you see in the rural economy. So we have to calibrate the fact that rural markets are under stress right now, and in that context, we are able to grow this business, as you can see, YTD by about 30%. Quick look at the farm financials. This is consolidated, which includes everything. Revenue was flattish. PBIT has been down from 1158 to 1051. The farm margins, just focus on one part of it, which is the core tractor PBIT margin, is at 16.9%. Last quarter we had called out that we have been advertising on World Cup. We've not called that out specifically in auto because it's part of a larger overall marketing spend, but in tractors it becomes significant. So the World Cup spend on tractors alone accounts for 0.7% margin. We've called that out separately. So if you were to add that back, in a way it becomes 16.9 plus 0.7. That's been called out separately at the bottom. This is a chart we like to close with to tell you that irrespective of what's happening to industry growth, we manage our margins in a band, and we have been in the 17 to 20% band, even though you're seeing the industry in a negative region, and that's something that we believe we will be able to sustain. Thank you. With that, Manoj, I welcome you.
So good afternoon, everyone. I think, and thank you, Rajesh. I think Anish did cover this briefly. So if you look at the overall growth of in consolidated revenue, it's about 15%. I would like to call out, of course, auto growth, but we had very good growth in financial services, about 24% growth. We also had very good growth in our Accelo business, about 21% growth. So there have been some notable contributors. So across businesses, we are doing well. I think Anish did highlight TechM, which is going through its own turnaround. From a PAT perspective, I think the 693 crore number which you see here is the net benefit of Sustain and the trucks impairment. I think what is the net result of that. So if you look at it, if you exclude these two distinct events which happened in Q3F23, I think our profits have gone up by about 34%, and overall YTD is a very healthy 33%. So overall we are doing very, very well in terms of our PAT growth. And another cut and I think just a split of how the 1984 from last year, same quarter to this year is moving up. The auto numbers are where Rajesh also highlighted very strong performance in terms of 721 crore increase in PAT. Farm is a little bit of a decline, and I think Rajesh mentioned some of the reasons. And in services, if you see, I think really it's TechM which is a big drag. Despite that, the services is almost flat at about a negative 13%. So that's the journey. I think in the interest of time, I'll just open it back to you for questions. Thank you so much.
All right, we can start with the questions. Anyone here? Because I've got quite a few online, so. Should I start online or? Okay, yes, please.
You spoke about the rural distress and the tractor market and farm equipment being flattish. Do you see the impact from the recent farmers' protest and elections to further take a significant impact on your tractor and agri business?
So even if you go back to, I just want to clarify one thing that you said just now. The farm machine business, we haven't seen stress. We're growing 30% YTD and in the quarter. So it is really the tractors. Just maybe I heard you say implements as well. So I'm just clarifying that. So even now going back to the farmer protest, it had happened last time. It was concentrated mainly in the Punjab Haryana region. The Punjab Haryana region this year has been one of the faster growing states. The real stress we've seen is Maharashtra downwards. So it's Maharashtra, Andhra, Telangana, Karnataka as the markets which are really, have seen large double-digit degrowths. Many of the northern markets, so like I said, Punjab, Haryana, UP, MP to some extent, Gujarat have all seen growths. So, a lot of when we look at the overall numbers, the overall number doesn't give you a necessary guidance on how the country is doing. The country is very split by way of what's been happening. So I don't see the farmer protest having any significant impact on industry growth. It didn't the last time it happened as well, which is the period 21-22 saw tractor industry big boom all through the farmer protest. I don't want to say anything more about what is behind the farmer protest at this point of time.
Elections.
Sorry. So the second point was on elections. We've seen in the past very little correlation between the election directly and tractor sales. Sometimes there's a timing issue, which means that customers, because they're busy in the electioneering, don't go to buy a product right then. They may go a little later and buy it. So it kind of catches up on an annual basis. There may be a month skew impact.
And coming to the passenger vehicle business, despite the huge waiting periods you've reduced, so what is the current average waiting period for consumers? And since you mentioned you're ramping up production, except for XUV 300, which is going through a midlife refresh, what is your target by end of Q4? Q4, where do you see that? And since next year everyone is expecting the auto industry to see some kind of slowdown over a high base because of the high base effect, do you see there will be some other headwinds for that as well?
So right now out of our portfolio, Thar has the longest waiting period, especially the two-wheel drive version of that, which I think goes up to 8 months to 12 months kind of timeline. So that's the longest waiting period. The next would be probably the Scorpio portfolio, which is Scorpio N and Scorpio Classic. On the XUV 700, we've been able to bring it down now to about 8 to 10 weeks. There are some variants where we are trying to cut, where we are consciously also trying to bring down the waiting period. So we've introduced a new version right now, and we've consciously made that kind of something that is available faster. So let's say on an average XUV 700 is about 8-9 weeks. 300 we just spoke about. We're in a changeover mode, so there is really no booking, and Bolero is about 3 weeks.
You mentioned about ramping up. So what is the target for Q4? I say
the target what waiting period
to reduce the waiting period, and also any more headwinds that you see for the passenger vehicle segment overall.
The target for waiting period will be about what I've said right now. So I don't think anything is going to change in the next 2 months on the waiting period on the products that I played out right now. The outlook on next year, I had it on my slide. So basically, SIAM projection right now for the industry is 10% for UVs, 3 to 4% for passenger vehicles, and we are giving a kind of directional input. I won't call it guidance, but a directional input that we would expect to continue gain market share and would be in the mid to high teens.
Good afternoon, gentlemen. Tushar from ITA Profit. Few questions. First, about the tractor business, given the rural picture that we have, how's the Oja brand of tractors performing? And given the rural economy situation, maybe you're seeing some green shoots. So, what is how is seeing? Is there an increased adoption of the small tractors, and what is the sales mix like? Secondly, if you can,
if you don't mind, can we just do one at a time?
Sure.
So let's just take the Oja one. So basically, I'm adding Oja and Target because these Target was the equivalent product on Swaraj, launched a little earlier than Oja. So if you basically take our take a market share comparison in two periods, April to August and September to January, which is really in a way pre-launch and post-launch, in the less than 30 horsepower segment, which is where both these brands play, our market share has gone up from 46% to 53%. So they're doing well. Second question.
Secondly, can you shed some light on the progress of your EV plans, the Born Electric platform? Given that we are seeing a reduction in EV prices by your competition, can we expect a decline in the XUV400 price? And also, what is the trend in the reduction in lithium-ion battery costs that you are seeing? I'm sure you're looking at those numbers as well, because Goldman Sachs in a recent report said that lithium-ion battery costs will come down by about 40% by I think 2025 as compared to 2022.
Yeah. So the first part of your question was how are we doing on our Born Electric platforms? They are on course, and you know, as we've said, we will have start of production in the later part of the calendar year, and a market launch sometime in early next year, which is calendar 2025. More on that as we come closer to it, but it's doing well, testing well, on track. The current point on pricing, I don't know who's acted first, but you know, we reintroduced our 400 with enhanced features and a good price. So maybe market is reacting to that. And so we don't need to do any correction at this point of time on that product. Yes, lithium-ion battery costs have been going down, but they already have. So when you're comparing 40% from 2022 to 25, I think some chunk of that, maybe 20-25% has already happened. And in commodities, you know, there isn't a point when you can say this trend will continue. It's driven by so many things. So I don't want to speculate on 2025, but clearly there has been a downward trend of lithium-ion batteries. Did I cover all your points?
Yeah, definitely. My final question is on Classic Legends. During the quarter, you actually invested about 875 crore, if I'm not mistaken. A new motorcycle was also launched in the form of Java 350. So are you looking at a thorough revamp of the Java and ESD business going forward, given the increasing competition in the space?
Yes, we are looking at getting momentum. Both the brands are very strong brands, which is the Java and the ESD, plus we have the BSA brand. So, you know, building that in international markets, and that's why we've gotten an external fund, a partner or financial partner, and we've, you know, brought in investment. So from all the existing partners, plus there's a new financial partner. We do look at starting to build this business more strongly as we go forward, and these are early days yet, so none of the money that has come in has really been deployed. Some of it will be in capex, some of it will be in strengthening the front end of the business. Anish, you want to add?
I'll just add that first, the 875 crore is a commitment over the next 3 years, and it is a commitment from us as well as our partners in this business, and we are very confident of this business. We feel we got great products, we got fantastic brands, and this is a business that is poised for a takeoff.
Any plans for entering the electric space in this space?
Yes, stay tuned on that.
Okay. Thank you so much.
Hi, Sheila Aditya from Informus Media. A few questions. First is regarding the operating margin. It is down YOY on a standalone level. So what is the reason for that? It is generally linked to the farm equipment, the tractor farm equipment space. And second question is regarding the Red Sea shipping issue. So have you seen any impact on your business because of the shipping issues that you have seen?
You want to take the shipping question? Margin you want to take, or you want to?
Yeah. So if you look at the margins, and we spoke a bit about some of the reasons. So clearly from a auto perspective, there's been a margin improvement. From a farm perspective, I think margins have declined partially because of the conditions in terms of the lower volumes. The second is also from the perspective of some of the marketing expenses during the quarter. So those are the two primary reasons. Apart from that, I think if you look at what's lower, I think there's a little bit of dividends which is slightly lower from TechM, which is the Q3 to Q3 comparison if you look at the PAT level. So those are the 2 or 3 main reasons if you look at it from an overall profitability perspective.
Yeah, just on the auto farm side, when you look at weighting it, average margin in auto is lesser than FES. So when auto is growing very fast and FES is not growing very fast, and you weigh both these, you are going to see a reduction because of weightage of the revenue impact of auto and farm. So when farm is on a revenue flattish kind of thing, which it is right now, and auto is growing very rapidly, it's going to have some impact on weighted margins. So that's why we try to show you both separately, so you can understand the actual effect of each. On the Red Sea question, there are basically breaking it up into 3 parts. One is there is some increase in cost because of what's happening right now. We are covered with some long-term contracts, but either way the cost increase is not very material. So that is impact 1. The second is time to get product to export markets. Again, it is not a very significant impact, but it has impacted us a little bit as we've got OJA right now in a launch phase in US, and we have seen a 2 to 4 weeks delay in our ability to get product out there. So that's a short-term impact. I think we are kind of over that, and the product is almost there, ready to go, but otherwise there's no significant impact except timing. On incoming raw material, we have proactively built up inventory based on learnings of the past. So we're by and large de-risked on that front. And we also have a few other arrangements with service lines to make sure we get a priority on incoming material. So overall, no significant impact to us on Red Sea.
Just an additional question. You mentioned you're trying to cut the waiting period. So how are you planning to achieve that? Are you augmenting production at existing facilities? Are you putting in new lines? What is the strategy?
Yeah, a lot of that is a part of that 49,000 capacity increase that we spoke about, which is starting to come in. So capacities of individual products have gone up. There's no new plant. It's all happening in existing plants. So Thar in Nasik, likewise XUV 700 and Scorpio in Chakan. So it's all happening in respective plants.
This is Swaraj from Financial Express. This is about MEAL, Mahindra Electric. It's a company which is in a phase which requires heavy investment as of today, because it's in a growth phase. Your last funding came in August last year with Temasek. First question, what is the outlook as far as investment plan is concerned for MEAL, and are you expecting any new funding rounds to commence anytime soon for that company?
So I'll take that. We are not looking for any new funding right now. We have talked about why we partnered with British International Investment as well as Temasek and the value that they bring to this company. The auto business actually has been on a great run, will continue to be on a great run in terms of what we see, and is generating all the cash that it needs to invest in EVs. We will be making more investments in EVs over time. We feel we got a very good set of products. A lot of the investments for this set of products has been made. We'll make more as we go on. So on balance, MEAL is positioned well. No more investments for us in terms of external folks coming in right now at least, and more investments in the future. And we'll talk about the investment flow as we end the year. We'll come back with the investment plan for the next 3 years for both EV and for ICE.
And second question relating to MEAL. At $9.8 billion, Mahindra's MEAL valuation is higher than the largest seller in the industry, which is Tata Motors, which is I think at 9.1, 9.2 billion. Although you have just one product in the market right now, compared to this is about MEAL.
Yes.
But then, what is the investors? What are the investors that are betting on M&M in terms of future? And what are the reasons behind basically M&M getting a higher valuation than Tata Motors?
See, valuations are never always based on the present. They're based on expectation of the future. And we've got marquee global investors who've given us this valuation, and that's what we believe as well as a right valuation. That is a function of the products that we have in the pipeline. And rather than my saying more about this right now, what I would do is wait till we have those products out where you can see them, not too far in the distant future, in fact in the next few months. And once you see them and once you drive them, then the question might well be, why only 9.8 billion?
And I just want to add, Swaraj, to your Anish, did you finish?
Yes.
Is also the strength of the existing brands, because when an investor is looking at a valuation, they're also seeing what are the strength of your existing brands which you can electrify, and the ability to create value on those. So it's a bunch of very successful brands which are likely to get electrified. So it's like Anish said, future value creation on brands which are already very strong.
Thank you.
Yeah. Can we take some online questions, please? Shelly will come back. Thank you. So Ragini asks if from Bloomberg, is Mahindra considering bidding for battery critical minerals with the auction starting today? Sorry.
No.
Okay.
No, we have our plans for batteries outlined. We've got multiple vendors. So at this point in time, we are well set in terms of what we need.
Alicia from Mint asks, what will be the impact on the last mile business in the event of tapering down of FAME 2 subsidies?
Yeah, sorry, I'm not sure about that. Is it related to the FAME subsidy?
Yes, FAME 2 subsidy.
Yeah, so Alicia, the new notification has just come in very broadly. It is changing the basis of FAME from ex-showroom price to ex-factory price. We are assessing the impact of that, but we know we live in a dynamic world and multiple variables in the mix change all the time, and we will suitably adapt our marketing approach or our pricing approach or our go-to-market approach based on changes that happen. But it's too early to react with what we would do based on this change which has just come a day back.
Ketan from Autocar asks, could you shed some light on the impairment loss on the commercial vehicle business? Can you review the truck and bus business on how it is doing, and what are your growth plans there?
Maybe I'll take part of that and then you want to add. So Ketan, the impairment on trucks and buses was last year Q3, not this year Q3. We are seeing a very strong growth in the trucks and buses business at this point of time. We are growing much faster than the market. There is a lot of focus on getting that business into momentum, and we remain very positive about the future prospects of this business. Our market share has gone up by about a share point in the last few months, but of course that's on a low base. We do see ourselves moving up very quickly with a lot of focus and very strong portfolio products. Anish,
I just say that we're very happy with the progress made in the business. We had reviewed this business very closely a couple of years ago in terms of should we exit or should we continue. We felt strongly once we completed the review that we should continue and the business can actually gain a lot of momentum, and it's been delivering on track in terms of what we had expected, and we feel that this will be a significant business for us in the future.
Yes, Shelly, can we?
Yeah, the presentation showed there was a sequential decline in the LMM volumes. So what is the reason for that, and what's the outlook?
Yeah, so one of the reasons why there has been some decline is the two segments we play in. One is what is called in the L5. The second is what is called the e-rickshaw, e-cart segment. The e-rickshaw, e-cart segment is spread across large number of very small players. In that segment, there has been some registration issues in some towns which has impacted that segment, and which is why we called out the L5 segment clearly. We hope to see that come back. There were also some supplier related challenges on the supply chain which had impacted ability to get product to market in that segment, which is the e-rickshaw, e-cart as it's called.
Okay. Also, how much have you already, in terms of funding, you've already got from BII of the 1,925 crore that you announced in 2022?
1,200 crores is something that we've gotten in of that funding amount.
Okay. And lastly, what has been the response to the newly launched XUV 400? What kind of uptick in volumes are you, what kind of bookings or numbers are you seeing?
We've seen a very good response to the new upgraded 400 which has come in. We would expect of that price band that we should be at around 20 to 25% share of that price band by way of the volume as we move over the next few months.
Thank you.
I'm taking one more from here. Aman Ahmed from Car and Bike. There appear to be suggestions that hybrid from some car makers are starting to find greater acceptance and demand for EVs is stagnating in some overseas market. Do you think this is a genuine reflection of market viability for BEVs, or is it only a momentary blip and not fully representative of what market prospects for BEV in India are like?
So let me take that. EV is really the market for the future because it is completely new technology in many ways, and it addresses all the issues around emissions, around operating cost. It also is one where the resulting product is far superior than ICE products in terms of how to drive, etc. There are markets like Norway where EV penetration is 90% plus, and that is a function of the ecosystem that goes around it as well. In certain markets, it's hit 20%, and we do see some challenges that come in. Often in colder markets, though Norway being a colder market, we've seen a very high EV penetration. But some of those challenges come in from not having that entire ecosystem in place, because it's tougher for people to be able to wait for 30 minutes to charge a car. And those are some of the challenges that the industry will have to work through. In India, EV penetration today is very low. It's 1.5% or so, or maybe even less. And that is something that will start again with people who can charge at home and charge in office. And as we start seeing a greater mass of cars on the road, we start seeing a greater ecosystem that's built up for charging. And both of those will go hand in hand. And if the ecosystem development is slower than the demand for products, then the demand for products will start getting a little less till the ecosystem starts catching up. But that's really going to be the future. Hybrid is in a sense is a bridge to EV. It's really not that different from ICE in many ways, but it's a bridge to EV, but it's not really the technology for the future as EV is.
So this is Aishwarya Patil from ET Now. You mentioned in the next couple months we might be able to see newer EV models. How many by end of this year or end of next year can we expect?
Like I said, we are going to launch them from a customers starting to sell to customers from the early part of 2025. So I think that's when you would see it going to customers. We would obviously reveal it sometime earlier than that, and hence what Anish said is you all will probably get to see it earlier than the customers would, which would be the later part of this calendar year.
Thank you. I'll take another one from Alisha again. Two questions from her, one on outlook on domestic tractor volumes, and the other one is on capacity outlook for UVs beyond Q4.
Okay, I thought these were headlines. Okay, so the first question is tractor outlook for this year. We expect the tractor industry to be more negative than what we had thought based on what we're seeing over the last few months. So we would expect tractor industry to be at around -5% for the full year. Quarter 4 would be more negative than that because right now the industry is at -4, which would go to -5 or something like that. So you would see roughly a 10% negative growth in the coming quarter in which we are, which is quarter 4. The second question is on UV capacity beyond quarter 4. We'll probably share a little bit more about that when we come into most probably the end of May analyst media meet.
There's one from Abhishek Banerjee on trucks and buses. Are you working on to augment your volumes in medium and heavy trucks and buses, which can give you higher margins also in the long term?
Can't say no to that.
Yes.
with the government announcing price mechanism in place for electric buses, is Mahindra looking at entering the e-bus segment and bidding for this? And also, since there's talk about hydrogen making the bus as a potential fuel for the passenger vehicle and commercial vehicle, are there any plans for Mahindra? Because you have been testing with the Israeli company fuel cell in electric three-wheeler space long before the stocks were happened. So what is the status of that as well?
No immediate plans for electric buses, so we're not in any of the bids. We do have a alternate fuel strategy in place for trucks and buses, and we'll talk more about that as we go along. But no immediate plans to get into electric buses.
And hydrogen?
That's part of the alternate fuels that we'll talk about, which is a longer term thing. Right now, our key focus on trucks and buses, honestly, is to get ourselves to being a significant player and a significant competitor, for which we need to gain a little bit more share in the markets in which we play. That's the immediate short-term focus of the business.
Yes, please.
You talked about the tractor outlook a bit, suggests that the distress in the rural markets is continuing. Could you give us some color on what is the state of demand in the rural markets, and when do you see a turnaround happening?
Yeah, like I said, there are some positives and there are some negatives. The negatives right now are coming out of the fact that there was a monsoon shortfall. It was not only a shortfall, the timing was bad. Also, reservoir levels are at a negative level after many quarters or years. So I think maybe 4 years or 5 years. So we are at -5% below LP on the reservoir level. So I think 2-3 things are going to drive rural sentiment upward. One is the news of a good monsoon, because one is that sentiment. Two, the reservoir levels will hopefully come back to an LPA or an average or a little better than that, which is important from a confidence building standpoint. The third is the increase in government spending overall. And at some stage, maybe post-election, I think we would probably see that this time. We all know it was just a vote on account budget, so it was very focused. But hopefully, the grand plan for India's economic growth will get unfolded post-elections, and we would see an increase. You remember the chart that I showed on the government spending. We need to see that starting to move up, because that is a key driver of rural prosperity in a way, because rural households' income comes from many other sources than just farming. So it is the overall prosperity in the rural household which gets enhanced when there's very good level of government spending. So I think we need to see 2 or 3 of these things happen. The positive news is the terms of trade. That is, we've seen a very highly correlated factor to purchase, which is right now, I think output inflation is 6% and input inflation is 3%. So we have a positive 3% terms of trade, which is a very good situation to be in. So that's a very big positive at the moment.
I just want to add a perspective here, just because I know there has been a lot of commentary in the market around rural, and a couple of you also mentioned the word distress linked with rural. If you look at it on a broader scale, the tractor market went up 27% about 3 years ago. And it's flat, it'll be down 6% right now. So if we look at it on a normative basis, we've seen cycles in the tractor market over time in any case. And this cycle being, over 2 or 3 years where it's been close to 0 or -5 or 6%, actually isn't a bad place. It's a reasonably good place overall from a rural standpoint. So we're not looking at it as if the rural market is distressed. It's just a part of the cycle right now. And if you look at it from a slightly longer term standpoint, we're actually in pretty good shape. That's part of the farm business. So from our standpoint overall, I think it's par for the course. I just wanted to provide that perspective.
Yeah, like Anish said, just adding on to what he said, I mean, at the end of the day, we're going to be selling, the industry is going to be selling close to 900,000 tractors. It's a lot. So, there are 900,000 customers buying tractors in this year.
Yeah, and that's significantly higher than what it was 3 years ago or 4 years ago. So if you just look at it from that perspective, rural actually is doing reasonably well. It may not be growing at 10% or 15% as we may want it to, but I think it's not that bad either.
Yes, Shelley.
Are you likely to realign production, take a production cut or something as far as tractors are concerned, and what would be the inventory level at your tractor dealers? And secondly, added to that, have you also seen some impact on the auto sector as far as rural demand is concerned, for demand of smaller trucks or pickups that you sell in the region?
Yeah, so production adjustment does happen based on how we need to do inventory. So that's a decision we would take from time to time. It's not like we need a very drastic cut, because we are at -2, so it's not like we are way off from what it was last year. We're doing better than the industry. That's why I'm saying we are at -2, industries at -4. So it's not like we need any significant cut in production to adjust to that. We are at by and large last year's level. From a dealer stock point of view, typically we like to be within 30 days. We are slightly above that, and we would adjust our stocks with dealers over the next 2 to 3 months downward somewhat, but it's not alarming. It's just a few days above the 30-day norm. On the auto side, actually, while we've done very well on market share of LCV less than 3.5 ton, that industry has been slightly negative through the year. Now that is driven by many other factors, but one of the factors is, some portion of that market is in rural, which hasn't seen the kind of growth that we would have wanted. So that's the segment in which we see some impact of rural. Bolero has a strong rural bias as well. So again, we're seeing that not growing, that segment not growing as well. So these are the two products which are strongly rural. Things like products like Scorpio Classic, which are semi-urban rural-based products, actually are very, very strong and robust. So it also depends on commercial use versus personal, and what level of income and what is the price point. So I would say it's a mixed story from the auto side.
Hi, just a couple of additional questions. You mentioned the tractor guidance. I think so. It's 5% down in FY24 or FY25?
FY24.
FY24.
No outlook has been put out for FY25.
Okay. And just like, since you listed on a console level, since you listed the InVid this year, are you also listing the AMC, Mahindra Manulife?
No plans for it at this point. We have to grow the business, and we are focused on growing that business and making it much bigger.
Okay. We'll take the last two questions. Yes, Swaraj.
The capex cycle for FY22 to FY24 was 15,900 crores. Are we on track for that as we enter the last quarter? And if you can give a view of capex for the next cycle also, if that's finalized.
Capex for the next cycle, as Anish said, we'll probably share when the new year starts and we close this cycle. So in May, we'll talk more about capacities and our own capex cycle. Swaraj don't readily recollect the 15,000 odd crores, but Manoj, I think, can probably reconcile that number for you.
So what we had said, 15,900, we are pretty much on track for that. So if I look at the cumulative capex over these 3 years, it is 15,900, give or take. Yeah.
Last question. There's one from Nandan from Reuters. What's our view? He's asking what's our view on the possible lowering of import taxes on hybrid cars by the government?
I think all I would say is you should look at what are the incentives that various governments around the world have given to hybrids over the last 20 years. And that may provide, I think people are still looking at it saying, does it make sense, does it not? Because is hybrid really the technology for the future? Or is it one that is there here and now that consumers may want for the short term? We will look at hybrid as, in a sense, an extension of ICE. It doesn't have as many significant benefits as EV does, and that's essentially where we are right now.
Okay. Thank you. Thanks so much for being here today. If there are any other questions that we've not been able to answer, please share it with us. We'll try and answer as soon as we can. Thank you. Thanks, gentlemen.
Thanks, everyone.
Thank you.
Thank you for being
here.
here.
Thank you.